Hello, good morning, good afternoon, good evening. Welcome to Master Market 101. Yesterday, as you all know, yesterday I mentioned about the JPM, which is JP Morgan. As you all know, yesterday the market was kind of greenish yesterday, and I said yesterday the market, because of the inflation, the market gonna be red. And we're gonna talk about JP Morgan. As you all know, JP Morgan had a report today, which is earning. And I mentioned yesterday, usually they usually have a good report like of over $3 billion. But this morning you can see JP Morgan missed their earning. So as you can see, let's read the article. US stock trader lower midday through trading. Dow Jones, which is down 1%, 1.5%. As you all know, the reason why they're gonna do the article more into depth why JP Morgan is very is miss the report. um and also the reason, also paying attention to also on the COVID. As you can see, for the past few days they're talking about COVID, that's related stock. So they said some state they're gonna have probably mandate mask again. So depending on which location you're at, watch the news and pay attention, because that probably a big factor by next week to probably drag the market even further down. So pay attention to that. And for now on, just talk about the JP Morgan. The JP Morgan, they say the revenue from the business dipped 6% and contribute to 11% slide in Morgan Stanley revenue and 30% drop in profit. That's a big dip. So that's basically, they say that they missed on 30% drop. So that's mean that the revenue they expected to be in stable level at 3 billion, from 56 billion to 53 billion, and right now they have 30% drop. And also the article say the bank report a profit of 2.4 billion, like I mentioned, or 1.39 per share for the quarter, and then compared to 3.4 billion, which is 1.85%. Yesterday the article say about the 53 billion, so that's why the reason you see they say about the 3 billion today. So analysts on average had earning profit of 153 per share. According to data, share from bank were down 1.2 and pre-market and dropped 23% of the year. So basically, as you can see, the result on yesterday, the market from JP Morgan, it was on like 113 and dropped one all the way to 1 7. So basically that's the bad news for JP Morgan. And before you watch also the market, also we got another one, which is of Well Fargo. Well Fargo, it is another earning for tomorrow, so pay attention to that as well. So we're gonna go deep into it to see what's Well Fargo gonna go and what the estimation before you invest on is, if it's a good thing or if it's not. That's one of the reasons I stay away from earning, because you never know what's gonna happen on earning. And basically, if you have a good estimate, the revenue gonna be good, you're gonna make a lot of money and it's gonna be drop skyrocketing. But if you have a bad feeling the market is gonna be drop, that's mean that Ivy crush gonna hit you. So that's why I say people stay away from earning, because earning gonna bite you at the end. So that's the reason I stay away from earning. And even though you say you make money, but the thing is earning is a bad deal for me. So I don't take chances of the earning on those stocks, especially if they have good realistic or good pattern of being a have bad earning. So basically I stay away from them. And now let's talk about the Well Fargo. The Well Fargo, which is WFC, is to give the quarter earning, which is by Friday. The estimation is 0.86, and we hope to hear the company will be beating that estimate, but also provide positive guidance and forecast growth for the next quarter. So the last quarter, the company beat by 0.7. So last quarter, which is a good, as you can see, last quarter 0. Last quarter the was an estimate 81, and then they beat it by 112. So basically they're expecting it to beat again this tomorrow, so we don't know. And as you can see, last quarter company beat 0.07, which was followed that 0 point drop on the price next day. So basically they said after the earning, the price didn't really make a big impact after the earning to the last quarter. And where They say this. They talk about the performance. They said trading $39 on July 13 over the 52. So basically, talk about last year. So basically, it was down at 15%. Give it that return actually negative. So people are already pricing how the price gonna drop because also of the PPI that was bad this morning. And so basically, if you before you invest on Well Fargo, I advise you to pay attention to this matter of fact, to this news. They're expecting on bidding. So basically, I pay attention. Usually when they're expecting something, usually doesn't matter. Sometimes that's depending on what kind of news. As you know, the PPI was bad, the CPI report was bad. So basically that's mean that the market gonna be red for the past couple few days. So basically, that's depending on what you invest on. But again, a lot of company gonna try to bail out, company gonna try to sell. So that's why you're gonna see the market trying to go move greenish. So a lot of people also think the next CPI, which is gonna be in August, they say the market gonna be even the CPI is gonna be lower. So basically is not gonna be 9.1 again. They said to this month is gonna be the highest CPI. That's why you see when the SP 500 drop from 370 to all the way to 71 and it dropped bound back to 375. So that's the reason why people think the price, we see the lowest price already. So basically they say they have a good opportunity for the price to go. And that was the video for today. If you like my video, give me a thumbs up, share to them that's new, subscribe and smash that button. And once again, it was Match 101. I'll see you next video. Ciao, have a good day. Check